Ladies and gentlemen, good day and welcome to DOMS Industries Limited Q2FY25 conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aniruddha Joshi from ICICI Securities. Thank you, and over to you, sir.
Yeah, thanks, Zico. On behalf of ICICI Securities, we welcome you all to Q2 FY25 results conference call of DOMS Industries. We have with us today senior management represented by Mr. Santosh Raveshia, Managing Director, and Mr. Rahul Shah, CFO. Now I hand over the call to the management for their initial comments on the quarterly performance, and then we will open the floor for question and answer session. Thanks, and over to you, Santosh Bhai.
Thank you very much, team. Good evening, everyone. It is a pleasure to welcome all the participants to the earnings call conference for Q2 and H1 FY25. Joining me on this call is Mr. Rahul Shah, our CFO, and the team from Marathon Capital, our investor relation advisors. Hope everyone had an amazing Diwali. We wish every one of you and your family a very prosperous new year ahead. We are pleased to inform you that we have successfully completed the acquisition of 51.8% stake in Uniclan Healthcare Private Limited, a growing company engaged in manufacturing and marketing of baby hygiene products, mainly diapers and wipes. Our teams are now focused on expanding the distribution network of Uniclan. We recently held our annual sales conference in Jaipur, wherein we also took an opportunity to introduce our entire channel family to the management, products and manufacturing infrastructure of Uniclan. The response from our channel partners, as expected, has been exciting. We are optimistic about our growth strategy and the baby hygiene segment and strongly believe that this acquisition shall have an overall positive impact on our growth plans. During the quarter, we have been able to achieve a year-on-year sales growth of approximately 20% in the first half of the current financial year, largely driven by increasing sales of writing pens, adhesives, and kits and combination packs, as well as the positive impact of the Uniclan acquisition. We would like to thank our entire team on channel partners whose efforts have helped us to achieve this growth in otherwise a difficult period with challenging demand conditions in the domestic market as well as growing global geopolitical tensions, especially in Middle East. The growth is also reflective of strong acceptance and expanding reach of DOMS brand and its unique product proposition. DOMS domestic sales with an increase of 25% continues to be the main driver of growth and now constitutes 85% of our total sales. Leveraging our market network strength and following a technology and data-driven approach, we have been able to further strengthen our network in India, which has led us to this growth. On the export front, owing to geopolitical tensions, especially in Middle East, our export revenues have marginally got impacted, but we remain persistent, though watchful and vigilant, to capitalize on the growth opportunities in the export markets as well. We foresee improvements in export business conditions and going forward, as we have started receiving encouraging feedback from most of our customers across all the territories we operate. On the product development and new product launches, I am pleased to share that we continue to introduce innovative and fascinating offerings for our consumers during the quarter. We have introduced new SKUs in writing instruments, marker pens, adhesives, kits and combination packs, fine art products, and other scholastic stationery materials. As always, we have received very encouraging and positive response from our consumers for these launches. With regard to our core stationery and art material business, we continue to focus on increasing our manufacturing capacities with multiple ongoing projects, including the construction at the adjoining 44-acre land parcel. In the last few months, we have successfully increased the production capacities of mathematical boxes by 20%, paper stationery products by 20%, post-installation of the third automatic exercise book manufacturing line, and are on the way to increase capacity utilization of third pen plant to reach the capacity of 1 million pens per day additionally. Going forward, we are excited to kick off the upcoming back-to-school season with increase in our capacity of pencils, ballpoint pens, and paper stationery products. Further, the planned launch of school bags, which will be launched in the market starting from Q4FY25, with attractive and interesting designs in all our sales verticals. Our business fundamentals overall remain strong, with all the underlying metrics in place of strong pipeline of new products, increasing capacities, targeted market expansion strategies, and a well-entrenched distribution network. With this working seamlessly in tandem, we are on track of achieving our full year target of close to 20% growth in revenues for our core stationery and art material business. With this, I would like to hand over the call to our Chief Financial Officer, Mr. Rahul Shah, for the update on Q2FY25 financial overview. Thank you very much, and Happy New Year again.
Thank you, Mr. Good evening, everyone. Wishing you all a great new year. We would now like to highlight the details of our financial performance for the quarter and 6-month period ended September 30, 2024. To begin with, a quick overview on the consolidated results for the second quarter financial year 2025. Consolidated operating revenues for Q2 FY25 stood at 457.8 crores, a growth of nearly 20% compared to the same quarter last financial year. This increase in sales was predominantly on account of increase in sales from office supply segment on account of increase in sale volume of ballpoint pens, increase in sales of mathematical boxes and erasers in the scholastic stationery segment, increase in sales of adhesives and kits and combination packs. The EBITDA margin for Q2 FY25 stood at 18.8% as compared to 17.1% in Q2 FY24. EBITDA grew by 31.7% to 85.9 crores as compared to 65.2 crores in Q2 FY24, with a margin expansion of nearly 171 basis points. This margin expansion year on year was account of slight increase in ASP as compared to the previous year same quarter. Also, we have benefited from efficiencies playing out on account of increase in scale and size of operations, resulting in better fixed cost absorption. As a result of these factors and on account of increase in other income and lower finance costs, and on the PAT front also we saw improvement in our margins from 9.8% in Q2 FY24 to 11.8% in Q2 FY25. PAT for Q2 FY25 stood at 53.7 crores. Talking of our half-yearly results, our revenue from operations grew by 18.5% to 902.8 crores in H1 FY25 from 761.8 crores in H1 FY24. EBITDA for the first half current financial year grew by 35.2% to 172.3 crores from 127.4 crores in HY FY24. Further, our PAT also increased from 73.9 crores in H1 FY24 to 108 crores in H1 FY25, a growth of approximately 46%. Sequentially, quarter-on-quarter, our revenues from operations have grown by 2.9% to 445 crores reported in Q1 FY25. This sequential growth was primarily attributed to the consolidation of about 14.3 crores of revenues from Uniclan, which we started consolidating effective September 16, 2024. If we exclude the impact of the Uniclan acquisition, our revenues for the quarter were almost flattish compared to the immediately preceding quarter, which is in line with our historical trends as well, when our revenues in the second quarter have been similar to the revenues in the first quarter. During the quarter, we saw an increase in our accounts receivable, accounts payable, and inventory cycle. The reason for these increase has been the increase in trade receivable on a standalone basis, as well as the impact of the Uniclan acquisition, which happened mid-month. Nevertheless, the working capital is still around 48.5 days, which remains within our targeted range of 45 to 50 days. On the capex front, we continue to focus on expanding our manufacturing capabilities to capitalize on the growth potential. During the first half of the current year, excluding the impact of the Uniclan acquisition, at a consolidated level, the company has invested 57 crores towards capital expenditure, including capital advances. These funds were primarily invested for the construction activities and purchase of new plant and machinery. The capex during the quarter was lower on account of halt in construction activities owing to the monsoon season. However, construction activities at our 44+ acre facilities have now begun in full swing, and we are on track to have our first building ready by Q2FY26. With this, I would like to open the floor for questions and answers. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Mr. Kunal Bora with BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity and good evening, Santosh and Rahul bhai. Congrats for a good performance in a weak market. I had a few questions. Can you give us a full quarter performance of Uniclan? 14 crores for 15 days looked like a better run rate compared to what you had when you acquired the business, maybe around 150 crores. And what's the outlook for second half for Uniclan? And also, if you can provide some sense on, like you mentioned that you got like good response from the distributors. What kind of benefit should we expect in the near term from that?
Kunal, so Uniclan acquisition was completed on September 16, 2024. So, it became a subsidiary effective that day. For the 15 odd days of consolidated numbers that we have in, we've had revenues of about 14.3 crores. From a run rate perspective, the monthly run rate of Uniclan is between 15 to 17 crores. But typically what happens with their size, a lot of their revenues get booked during the later half of the month. That's how typically that business operates. So from a current capacity perspective also, we believe Uniclan will continue, to have a run rate of between 15 to 17 odd crores. Like we mentioned earlier, currently they have 2 automatic manufacturing lines with a total installed capacity of 40 crore diapers annum. The third line has already reached Indian shores. It is currently under clearing from the ports, should come to the factory in the next week or so. and commercial production after testing and all should start by the end of the current calendar year. So in the first quarter, there we might see some increase in revenues due to this. But right now, this is where the revenue guidance is. And with respect to margin, like we highlighted in the previous call, Uniclan is, when compared to our other core business, stationery and art material, it's slightly lower with EBITDA margins close to about 5 to 7%.
Understood. And what's the visibility you have for FY26 and 27, because new capacity will come on board? So current turn rate implies you'll be doing about whatever 180 crore kind of revenue. So how does that look like in FY26? And maybe if you have any visibility on FY27.
So, Kunal bhai, right now, like Santosh bhai mentioned, we had our annual sales conference this year at Jaipur. The intention was to introduce our family of channel partners to the Uniclan team, the Uniclan infrastructure, their products. In this event, we also showcased the DOMS co-branded diaper packaging to all of them. The response from our channel partners was very exciting. I think, conservatively speaking, we should have close to about 50.
So now the 50 of our channel partners have already confirmed their interest to participate with this particular new line. And I think it should be, if this 50 gets materialized, it's enough for.
So we should look at more from a utilization rate, capacity utilization of close to 85 to 90% in the coming financial year.
Which was 60% when you acquired the business, right? And now it is what?
And with the new plant for diapers, and also they are installing a separate unit for manufacturing of wet wipes, which will have a capacity of about 1.72 crore packs a year.
Understood. Okay. And can you also explain the guidance of 20% growth that I believe excludes Uniclan, right? And which will mean that the core business ex Uniclan should have a stronger second half compared to first half?
So, Kunal bhai, yes, the 20% growth guidance that we have for the full year is excluding the impact of Uniclan. For that core business, we are having a revenue growth target of close to 20%. The key driver for this growth shall be the increasing capacity in our ballpoint pens, adhesives, fine art products, and hobby products like fabric colors that we recently launched. Further, we will also get a little bit of benefit from the increase in capacity of wooden pencils towards the last quarter of the current financial year. These factors, coupled with improving market sentiments and the beginning of new back-to-school season, should help us achieving in the target growth of about 20%. Along with Uniclan being consolidated for the entire second half of the financial year 2025, our consolidated revenue growth for FY25 should be approximately 23 to 25%. At Uniclan, we will be able to see increase in volumes also, as the production capacity shall rise once their third line is installed and ready for commercialization.
Understood. Thanks. And paper business seems to have seen some decline. Is it because of decrease in paper prints or anything else?
It's a mix of both the two factors. One, like you rightly said, this segment saw a marginal decline of about 6.4% during this period, primarily attributed to decrease in a little bit of paper prices, where we passed on the benefit to our consumers and customers, and slightly sluggish demand, especially coming from on the export front from US. So as a result of these factors, we saw a slight decline, but we remain optimistic, with launching new products, the entire design philosophy of our books, we are changing them. The new designing and everything, is something which is very fascinating. So we are optimistic for this segment. And with the new line that we've installed now, I think this business should see a significant uptake in Q3 and Q4.
Understood. Just one last question. After that, I'll come in the queue. On the pen business, how is it? How have you done? What kind of market share have you achieved? What's the industry doing? And as the new capacity comes on board, where do you expect to end the year in terms of sales?
So, Kunal, historically also we've never, guided for any particular product or how much we will do. But we continue launching new SKUs within our pen segment also. Today, we primarily now have 5 different products within the ballpoint pen segment, which among them have 22 plus SKUs with different pack size and colors. We also recently, launched our gel pens and have a strong new product pipeline to be launched as we increase the production from the new facility which got commercialized. From our thought process for this segment, as you know, our most important customers have always been young kids, and consumption is more school-driven. So company believes in having a rationalized approach towards new product development as well as pricing. So we'll continue to focus on these segments, come out with new SKUs, attractive packs, attractive products, and we are hopeful that we'll soon be short of capacity for this segment also.
So currently, are you operating at full capacity or?
So currently we are operating with almost 100%, I can say, capacity utilization. As Rahul Bhai mentioned, we are mainly into 5 rupee and 10 rupee pens, which are mostly addressed to school kids. So as of now, we are out of stock each day.
Understood. Thank you, Rahul. Thank you, Santosh. I will come back in the queue.
Thank you.
Thank you. The next question is from the line of Jinesh Joshi from PL Capital. Please go ahead.
Thanks for the opportunity. Sir, just one observation on our distribution mix. So if I look at our distribution count, or rather the distributor count, it stands at about 4750, which is similar to what it was in the previous quarter. But if I look at our retail touch points, it has increased by about 10,000 to 135,000 touch points. So if you can explain the reason behind this, and the quantum appears to be quite big if I talk about the sequential increase. So any thoughts on that?
So basically, Dinesh, this increase has happened is basically at the retail level, where we had about 125,000 plus retail outlets when we spoke last, and now we've increased it by just 30,000. By 10,000. This entire universe is huge, close to 300,000 plus retail outlets. Our current partners within the network, which are stockists and distributors, are well invested and capable enough of handling this larger volume from a retail expansion purposes, and therefore we've not found the requirement to increase the distribution strength or the super stockist strength. This is something, as we grow, we keep evaluating. If we feel that our current channel partner for that particular geography is not being able to do significant justice, then only we try to open a new, partner in the ecosystem. Till the time they are able to do justice, keep investing as per the requirements and norms of the company. And if there is no such need, then, this network expansion is really not required. But retail expansion, as we mentioned, we will continue to do it in a very concentrated way. whereby we will ensure that the throughput each outlet is maximized and only then keep increasing. And to meet the requirements of this retail universe, we've increased our sales team from 675 plus people to now that you see of 750 plus. And this expansion will further happen.
Sure. Any specific geography that we have targeted? Because 10,000 appears to be quite big if I look at the last 4-5 quarters, or rather 3-4 quarters.
So it's been almost pan-India, nothing specific geography-wise.
Sure. And I just want to understand our top-line growth a bit better. So we reported about 20% growth, but obviously a contribution of 3% comes from the hygiene product. And if I look at our like-to-like growth and knock off the hygiene product revenue, our growth will be at about 16% odd. And also I believe that pens as a category is blossoming, and the contribution in 2Q will be much higher than what it would have been in the base quarter, although we are not sharing the numbers as such, which apparently indicates that the growth in the other core categories is perhaps a bit slow. I mean, paper is one example that you gave that witnessed a bit of a decline this time around. So are we seeing any kind of growth challenges in any other categories? Because apparently it appears that newer categories are basically the key levers for growth for us.
So Dinesh, if I have to talk about category level growth, scholastic stationery, which is our the largest category for us, that witnessed a growth of about 12%. Scholastic art business grew by 7%. We need to understand a little bit, while these two segments you might think the growth was a little lower, but kits and combination pack sales grew by about 23%. Now, kits and combination pack is something which is manufactured using products from all these segments, which is scholastic stationery, scholastic art. It's a combination of these products. So what happens is this was a season where, this quarter we saw a little bit of festivals. Onam came in, the Durga Puja, the buying that happens for Durga Puja, that all came in this quarter. So kits and combination pack demand increases. So as such, across all our segments, we continue to see a strong growth, strong demand. It's just that at an SKU level or segment level, it might change depending on, like festive season, non-festive season, exam season, back-to-school season. At that level, there might be a little bit of changes. But growth has been, momentum has been strong. Definitely, like Santosh Bhai highlighted, there were certain challenges in the market. But with the support of our team and partners, we've been able to do reasonably well. And given the capacities will increase going forward, our ability to serve the market would also improve.
So, Dinesh Bhai, I'm sure you're aware that we have a new pencil plant coming up with a massive capacity of around 2.5 million pencils a day. So once that is, the capacities are in place, I'm sure you'll see a significant growth for that particular period, and for the stationery business as well.
Understood. So one last question from my side. In the opening remarks, you mentioned that we'll be kind of launching a new school bag in 4Q of FY25, and basically that is the period when the back-to-school business will gain momentum. So any thoughts or particular aspirations that you have with respect to achieving some kind of basically some top-line number that you have in mind? And also if you can share what kind of EBITDA margin does this category make, because diapers is basically a margin dilutive category for us. But will this category have margins similar to what we are reporting, or will it be higher? Any thoughts on that? And also some numbers, any aspirations that you have to scale this business going ahead?
So, Jimmy, our kilo revenue from operation stood at around 1.8 crore in Q2 FY2025. It was, as you see, a sequential growth. It was 26%, up compared to quarter one. So basically, I think this is in business where we are just, taking very initial steps. For us, important is that, we deliver a very excellent product to the trade primarily. And this business is absolutely going to be, a business driven by enough margin in line with the margins of DOMS. And we are sure that, by in another couple of quarters, we'll be able to give more light, to your answer. So for us, for now, please wish us, all your best wishes to graduate ourselves, in this particular line as well.
Sure, sir. Thank you so much and all the best.
Thank you, dear.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Sneha Talreja from Nuvama. Please go ahead.
Good evening, sir. Congratulations on your set of numbers. Just a couple of questions from my end. Firstly, on the margins, now you've been guiding for around 17% margin. And for consecutive 2 quarters, we were seeing surprises, apart from being surprised even last year on a positive note.
We cannot hear you well.
You can be a little clear. That you use your handset. Your audio is breaking, ma'am.
Is it better now?
Yes, ma'am. Please go ahead.
Yeah. So my question was more related to margins. You've been surprising us on a positive note for consecutive 2 quarters, and even of last year. Now you've guided for 17% sort of a margin. I understand Clapjoy, your unique plan will come with a lower margin. But to achieve that 17% run rate, you'll have to go down to 15%, which is what we don't foresee going in the second half. So would you like to give any revised guidance for both FY25 as well as, the coming times for the margin front?
So, our consolidated EBITDA margins for Q2 FY25 stood at about 18.8%. This margin expansion year-on-year was account of increase in ASPs and also the benefit from efficiency. However, sequentially, if you just see the results, you see that margins have declined from 19.4% to 18.8%, a decline of about 60 basis points. This decline in EBITDA margin, is primarily due to certain raw material prices increasing and, slight increasing selling and distribution costs and advertising spend with Uniclan being, consolidated. At Uniclan, the EBITDA margins are between about, close to about 5 to 7%. So if you see in the entire second half being consolidated with a sales of about, run rate of about 15 to 17 crores, we believe on an average the DOMS consolidated margin should come in the range of 17 to 17.5%. And also on 3rd October, we distributed ESOPs to the eligible employees of the company. The accounting of ESOPs for this 6-month period also should have an impact of about 0.2 to 0.3% on the margins. Therefore, you can definitely do the math well. You'll see probably our margins coming to that range of about 17 to 17.5%.
Understood, sir. That was helpful. Secondly, would like to know, we have spoken a lot on the Uniclan acquisition, but just wanted to go back with some numbers. How are we doing with other acquisitions that we took place? Be it Skido, what are the plans at this point of time in those acquisitions, or be it Clapjoy? Some sense there would be helpful.
So, to start with Skido, Santosh Bhai already highlighted that, Skido did a revenue of about 1.8 crores in the second quarter, which was a sequential growth of 26%. Currently, about 60% of the business of Skido comes from, selling the products to DOMS, which DOMS utilizes in its kits and combination packs. Like we said, the product line is more or less ready. We would be introducing these products to the market by Q4 2024, and this will be across all our sales verticals. So once this once the launch happens, once we start getting feedback from the customers, we'll have a little bit of better idea. But this will be a slow and steady sort of a thing, because we'll have to collect a lot of market intelligence, and based on all the data that we receive, we will probably have a better sort of answer to your queries in the next or the call after that. With respect to Clapjoy, the revenues of Clapjoy in the second quarter stood at about 2 crore rupees, which was a growth of about 12% sequentially. In Clapjoy, we are pleased to, if you see year on year, so we've been close to the full year numbers, what they achieved in the previous year. We are very close to achieving that in the first 7 months of the current year. So there we are seeing good growth. Also Clapjoy now has launched products which is co-branded with DOMS. This is resulting in improved acceptance of their products. A lot of our channel players have started selling Clapjoy products as well. So both these companies, Kiddo and Clapjoy, are still on the learning curve, and probably over the next, I would say about a year, 18 months, we would have a better, sense of how these businesses will go on. In terms of our other key, subsidiaries, Pioneer Stationery, we mentioned that this quarter, they had a little bit of, a downward trend in terms of revenues, basically because of decline in raw material prices, and hence the selling price when we passed on the benefits to the customers. And also there was a little bit of impact on export sales, primarily to the US. However, their EBITDA has increased by approximately 5% during the period because of, again, the raw material prices. In terms of capacity, currently we are at about 70% utilization. With the new plant coming in, our capacity increases by about 20%. And, we are hopeful with the new product launch that the redesigning that has happened, we'll be able to have a great back-to-school season for the paper stationery segment. Last is Microwood. Here also, we said our capacity for mathematical instrument boxes increased by 20%. All these boxes get supplied by Microwood, the tin division, where we continue to increase capacity. Even in the paper division, which supplies us primary packing material, we continue to increase capacity by almost 20 to 25%. So overall, all subsidiaries are doing well. Some need to be nurtured. The nurturing is happening, and very soon we'll have positive results from all of them.
I understood, sir. That was really helpful. All the very best, sir.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Resham Mehta with Green Edge Wealth. Please go ahead.
Yeah, thank you. So the first one is on Uniclan. If you could just comment on the working capital cycle, how divergent it is from our core stationery business. And so that's the first question.
So, basically, in terms of the working capital cycle, in terms of accounts receivable, yes, because they are a new and a growing company, they need to give an extended credit period. The credit period for them typically is close to about 60 days right now. But other than that, their accounts payables and inventories are pretty much lying with our trends, which is, about 25 days and about 40 days respectively.
Okay. And since, you had the new sales conference, right? So if you could just comment on, how much is the overlap between the super stockists and distributors of Uniclan and the core stationery business?
So basically, there is no overlap as such. The entire perspective of doing this in Jaipur was to introduce our channel partners to the product and to the company management infrastructure. A lot of our existing channel partners in the stationery and art material segment have shown interest to become channel partners for the Uniclan product as well.
So you will see the overlap going on.
The overlap will now come in, but the excitement levels are high. Like we said, more than 50 of our channel partners have shown interest in becoming a channel partner for Uniclan as well.
Got it. And on this Kiddo business, I just missed this. So we are yet to launch products, and that happens Q4 FY25, current financial year onwards. Did I hear that right? Okay.
So because this product is very, it's a little seasonal from a back-to-school perspective. Bags, you see there's a very high demand comes during the back-to-school season. So our intention is to launch, this new line of DOMS bags in the market during the upcoming back-to-school season, and hence we planned the launch around, end of the third quarter, beginning of the fourth quarter.
Got it. And lastly, on the pens business, so would it be possible for you to quantify the pen revenues for the first half of this financial year versus what was it last year? And also the revenue salience of rupee 5 pen segment within the overall revenue?
So at the pen level, a little difficult, but if you see office supplies, which predominantly constitutes pen, we've seen a growth of approximately 97%. Our office supply business in the first half stands at about 96 crores compared to about 48 crores in the previous year, same period. And this increase has been primarily driven through the increase in volume of writing pens, volume and sales of writing pens.
Okay. And how much was it in the last first half, H1 of FY24?
About 48 crores. That also included pen business, significant amount of pen business. So the ballpoint pen business and all started. Actually, we launched writing pens in June 23.
Okay. And the revenue salience of rupee 5 pens within the pen revenue?
Honestly, don't have that. We don't have that figure of breakup. But like we mentioned, predominantly our products are targeted towards kids and school consumption. Currently, maximum pens that we sell are under the 5 rupee MRP segment and 10 rupee segment. The new facility that we've started for pens, there the focus on 10 rupees is slightly higher, while the current two facilities is more for the 5 rupee segment.
Got it. Thank you so much and all the best.
Thank you. The next question is from the line of Aniruddha Joshi from ICICI Securities. Please go ahead, sir.
Yeah. So my question is, what is the 3-year in a way business plan or 5-year business plan in terms of the exports business? Because we are doing exceedingly well in domestic part of the business. So whether the management will be investing more time in driving the domestic business more, or how we should think about in terms of the export business, because it is not just one geography, multiple geographies. So some amount of management bandwidth in a way in different geographies will also be required. So how should we think in terms of 3 to 5 year window on that?
So basically, as of now, we are present in about 50 plus countries, where we sell our DOMS products. To increase, our presence to more countries. We are already in discussion with FILA subsidiaries across the world, where they have better presence, and we are likely to start our launch through FILA subsidiaries in those countries where we are not present right now, from the beginning of the next financial year. Here, the target is very simple, that we would like to, as our domestic business is also growing very rapid, we would like to maintain a balance of about close to between 15 to 20% of business, coming from exports. As we have always been, domestic-driven company, and still we feel that there is enough space to occupy business and increase our business in domestic. We would like to remain little conservative in terms of growing our exports too much extensive. So you can expect a range of around 15 to 20%, which will come from our export part of business in another 3 to 5 years.
Okay, sure, sir. Understood. Second question is on the brands other than DOMS. So, for example, we have some brands like C3 or even Fixie Fix, or to some extent Neon is a sub-brand. Summaries is also one brand. So how is the performance of these sub-brands, and will we see more investment in the sub-branding or driving these brands relatively bigger from current levels, so as to diversify from DOMS brand also?
So I'll just explain, here that, what brand does what, So basically, C3 is a brand which is more of a rural brand, our non-wood pencils. This business has been growing not extensive, but in a gradual way. There is another brand which is Summaries, which is our fine art brand, and this particular brand we just started this around in the early this year. I'm sure you are. So this is sub-brand of DOMS, and the business from Summaries has just started seeing the light, since last quarter. We are expecting a very decent and very aggressive results, in another quarters to come. There is another brand which is Fixie Fix, which is a brand related to our adhesive category, and we again started very early this year, and we are expecting the same results, very positive results. The initial response from the market has been very well accepting, and I'm sure, in another couple of quarters, we'll have more light, on the results as well.
But just to add, Fixie Fix, Summaries are all sub-brands. So, whenever we talk about the DOM sales, it includes the sales of Summaries and Fixie Fix. Going forward, we'll have one additional brand which will become significant, Wowper, which will be for the baby hygiene product segment. But otherwise, the three umbrella brands, if you can call, would be DOM, C3, and Wowper.
Okay, sure, sir. Understood. Very, very helpful. Many thanks.
Thank you.
The next question is from the line of Aditya Deora with Divisha Investments. Please go ahead.
Good afternoon, sir. So what kind of capacity we are working for the school bags, which we plan to launch in Q4?
For what product, Aditya?
I'm asking, what kind of capacity we are working for the school bags, which we plan to launch in Q4?
School bags. Aditya, we would like to start with around, 25,000 bags a month, to begin with. Once we start getting, the response and, the more, intellect about the market, I think we'll gradually increase the capacity there.
Perfect. Your bags are of really good quality, the ones you provide in the kit. And any other white spaces we are working on right now?
Not really.
But we are not something that you do, but as a company, we are always looking for exciting opportunities within our universe. We love partnering with technocrats, people who love their product, have good understanding of manufacturing capabilities. And if there is anything interesting, we'll always keep evaluating. But as of now, the focus is definitely on successfully implementing our growth plans for the stationery segment, and at the same time, doing justice to the Uniclan acquisition.
Perfect, sir. Thank you. Thank you, sir.
Thank you, Aditya.
Thank you. The next question is from the line of Kunal Bora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity again. On pen, can you talk about the competitive intensity? You're rapidly expanding the capacity, and you would have gained market share. Are you seeing any response from the competition, especially in rupee 5 segment, where you might have gained market share? And also, what's the distribution reach now versus the market leader?
Kunal bhai, probably when we entered with our 5 rupee pens, probably, the most of the organized players had already withdrawn, from this particular category, this particular price point. So, right now, luckily we have a first mover advantage when it comes to, organized players, in writing instruments for 5 rupee segment. Of course, we are expecting, certain comeback. But still, we right now are enjoying first mover advantage, and as I said, we are selling all the capacities we produce, and we are still, working on more capacities for the time for under, in another certain months to come.
Understood. So far, you've not seen any response from the competition, and you continue to gain market share, especially in the 5 rupee pen.
Yeah, I think yes, we are doing well, and we'll keep doing well because our products are unique. Our products are very different from what is right now available. So it looks like we'll be doing good.
You're making decent margins in 5 rupees, and competition, which might be larger compared to you, is not able to make margins in 5 rupee pen. Is that how it's working out?
Kunal, we've always worked, on technology and, high-tech solutions. So, I'm sure, if you've seen our plants, they are much more high-tech and, they are fully, driven with automation and robotics. So, with the help of, this automation and technology, we are able to produce these 5 rupee pens and also, make a decent margin for the company.
Understood. And lastly, can you talk about the timeline of the new factories going live? Are you on track to get the first factory up and running in the new plot of land by end of 25? Also, if the market remains, you're not seeing weakness, but otherwise, market is weak. Generally, consumer demand is weak. Would you look to postpone or spread out the capacity utilization if the market remains weak, or you are fully confident that there will be enough demand?
Kunal, we are fully confident about the demand, and we are also confident about, the pipeline of the innovation that we have in place right now. What we are just waiting for is that, the start of the new plant, which is likely to start in FY26. And that's the only wait we have. But still, with our existing capacities, we are trying to accommodate all the newness, that we are bringing to this particular, category right now.
Understood. Thanks a lot, Sundeshwar, and all the best.
Thanks a lot, Kunal.
Thank you. The next question is from the line of Mosam Mehta with Well Guardian. Please go ahead.
Hello. Am I audible?
Yes, ma'am, please.
Yeah, Mosam.
Hi. Congratulations on a good set of numbers. Just wanted one bookkeeping question regarding the sales breakup for last year, September 23 quarter.
Mm-hmm. So, from a segment-wise perspective?
Yes, product category-wise. Yeah, so scholastic, stationery and all.
So in Q2 FY23-24, scholastic stationery was approximately 44%.
Okay.
Scholastic art was about 28%.
Okay.
Kits and combination was 9%. Similarly, paper stationery. Office supplies was about 7%. Hobby and craft, fine art was close to 1%. And that time we did not have anything in hygiene, so that was 0%. Others was some other trading and all such things.
Okay. Thank you so much.
Yeah.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you everyone for your precious time, and looking forward to meeting everyone again next year very soon. Thank you again. Bye-bye.
Thank you very much. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.